1 year ago, a man stood in a rose garden and announced he was going to save the American economy. He had a chart, a big one. It listed every country on Earth and how much America was going to tax their goods. Some countries got 10%, some got 20%. Vietnam got 46%. The crowd cheered. He called it Liberation Day. The stock market responded by losing $2.5 trillion in 48 hours. That was not the plan. Let us start with the trade deficit. The entire reason Liberation Day happened. The administration called it a national emergency, a sign that America had been losing for decades. The goods trade deficit in 2024 was $904 billion, a number so large it barely feels real. After 1 year of the highest tariffs in nearly a century, the deficit in 2025 came in at $901 billion, $3 billion lower. On a $900 billion problem, that is a 0.3% improvement. If this were a diet, you would have lost half a pound after a year of starving yourself. Here is why it did not work. And this is the part nobody explains clearly enough. Tariffs cannot fix a trade deficit on their own. The deficit exists because Americans spend more than they save. That is a behavior problem, not a trade problem. You cannot tax your way out of a spending habit. America's fiscal deficit is forecast to hit 7% of GDP. That is not a number that shrinks trade deficits. That is a number that grows them. But the manufacturing jobs, surely those came back. The manufacturing sector lost nearly 100,000 jobs in the 10 months following Liberation Day. The economy as a whole had fewer total jobs at the end of 2025 than it did the morning the tariffs were signed. The promise was a golden age of American manufacturing. The result, so far, is a slightly smaller number on a very large invoice that nobody is paying down. To understand what happened next, you need to understand what a tariff actually is. Not the textbook definition, the real one. A tariff is a tax. That is it. When America says it is putting a 20% tariff on shoes made in Vietnam, it means any American company that imports those shoes has to pay a 20% fee at the border. The company does not absorb that cost. It passes it to the store passes it to you. So when America raised its average tariff rate to nearly 17%, the highest effective level since the early 1930s, it was not punishing Vietnam or China or the European Union. It was, quietly, taxing its own people. JP Morgan calculated the number, $660 billion a year. That is the size of the additional tax burden that was placed on American consumers. The Tax Foundation put the per household cost at roughly $1,000 in extra. Costs in 2025 rising to $1,300 in 2026. The promise was that the pain would be temporary, that factories would come back, that jobs would return, that the trade deficit, the gap between what America imports and what it exports, would shrink. 1 year later, Finn has some questions. Now here is where the story gets genuinely strange. In May 2025, a federal court looked at Liberation Day and said the quiet part out loud. The tariffs were illegal. The law the administration used, the International Emergency Economic Powers Act, was designed for national emergencies. Sanctions, asset freezes, responding to foreign threats. The court found that a trade deficit, whatever its size, does not qualify as the kind of emergency that authorizes the largest tax increase in 30 years. The ruling was appealed, then appealed again. On February 20th, 2026, the Supreme Court agreed 6 votes to 3 in a case called Learning Resources versus Trump. Chief Justice Roberts wrote the majority opinion. He said it plainly: the power to tax belongs to Congress, not the executive. IEEPA does not authorize the president to impose tariffs. By the time you watch this video, the government has collected at least $160 billion in tariffs that the highest court in America has ruled were illegal. And what happened the day that ruling came down? A new executive order was signed. Same tariff rates, different legal basis. Section 122 of the Trade Act of 1974. The wall came down and went straight back up before the ink was dry. While America was busy arguing with itself, something else was happening outside its borders. The rest of the world did not wait. The European Union signed new trade agreements with South America, Indonesia, India, and Mexico. Canada and New Zealand finalized new free trade deals specifically designed to reduce dependence on the American market. Across Asia, surveys found that more than half of respondents now identify China as the dominant economic force in the region, a number that keeps rising. And the dollar, the one asset that was supposed to strengthen when global uncertainty rises, did something it almost never does. It fell. Research found that after Liberation Day, Foreign investors sold American debt and dollar-denominated assets at a pace that broke from every historical pattern. Normally, when the world gets scared, it runs to the dollar. This time, it pulled back. The dollar's share of central bank reserves has quietly dropped to a 2-decade low. Central banks are buying gold instead. That is not a minor footnote. That is a structural shift that takes decades to reverse. So here is where we stand. 1 year after the most dramatic reshaping of global trade in a century. The trade deficit barely moved, the manufacturing jobs did not come back, the tariffs were ruled illegal by the Supreme Court and immediately rebuilt on different legal ground. American households are paying roughly $1,000 more per year for the same goods. The rest of the world is signing trade deals with each other and quietly reducing how much it needs America in the equation. Was Liberation Day a failure? Depends entirely on who you ask. The administration will say the foundations are being laid. The economists will show you the numbers. The factories are still quiet. The shelves are slightly more expensive. And the world is moving on without asking for permission. 1 year in, the trade war is not over. It has not been won. It has not been lost. It has simply become the new normal, which raises the only question that actually matters. Now what?